Hello everybody, welcome back to another live lesson. This week we're going, week 20, right? Big 2-0. We're going over improvement, right? But also the opposite of improvement, and that is erratic change, right? These are two opposite ends of the spectrum when it comes to day trading, swing trading, investing, whatever it is. And the reason these are polar opposites is because it feels like you're doing the same thing. When you enact either one of these, what are we doing? Well, we're trying to make more money. That's the ultimate goal, is we're trying to make more money. But today we're going to do a deep dive into what is improving, aka getting us closer to that goal, and what is erratic change, meaning setting the probabilities all astray so that we can't accurately predict the markets, and that's going to lead us away from our goal, right? Getting straight into it, let's kind of define these two. So we'll start with erratic change. What is it? And why is it so bad? And I'm going to go and read right there what I have as the answer. And when I refer to it, I mean that you alter the way you trade, aka your strategy. And again, this doesn't just include, your entry and your TP and your SL. It includes everything, how much you risk, what days you trade, what time of day you trade, everything when it comes to you being in the markets or watching the markets is involved in your trading strategy. And the reason this is so bad is because anytime that you're continuously making modifications on a day-by-day or a week-by-week basis, all this is doing is reaffirming the belief that you have a doubt in your abilities, right? Because why would you make a change if you had total confidence in your abilities to trade? If you knew, hey, this is just a small period of drawdown, I'm going to make it through this, that means you don't doubt your abilities, meaning you're not going to make a change. You don't have any reason to change that. But if you're constantly thinking, oh man, I could have done this better, I could have made this trade better, I could have held this longer, and then you start thinking, well, how can I hold this trade better? Ooh, I'll make my TP a little bit farther away, right? I'll get a little more money out of this. Or, well, I think I got stopped out really quickly on this trade, so I'm going to move my stop closer every time I take a trade. These are erratic changes, right? They're not just, slow, steady growth. It is making the changes that are ultimately putting you in drawdown because you can't continuously turn a profit included with those losses. Okay, so now we're going to go over what is real improvement and how do we identify it. Going right to our answer here, real improvement, right, can only be accessed after we have become capable of following our rules, right? Reading what I've got there verbatim, because it is so important for you guys to understand, even if you are, quote unquote, improving your strategy, right? Let's say beforehand, let's imagine your back-tested results and your live results are 100%, one-to-one, right? There's no little errors in the data whatsoever, right? And let's say you back-test for 3 months and you get a result of plus 10R. And then you make the change and you backtest and you get a result of plus 30R. Well, that goes from averaging 3R a month to 10R a month. That's a huge improvement. That's 3x. All right, so that is improving. But real improvement can only be accessed after you've been capable of following the rules, because what good are those back-tested results if you can't accurately perform them day in and day out? And the only way that we get better at performing our rules day in and day out is by not changing them. That goes back to erratic change. If you're constantly making these different, adjustments to your strategy, then how can you say that you're really getting better when you're not able to follow those rules? So back to real improvement. The way we identify it first is, can we follow our rules? That comes from ourselves. But then what is actual improvement? Right? So some things may be like making an adjustment to how much we risk. If we notice that, hey, I get really antsy and really anxious when price gets close to my stop loss, well, that's a really good indicator that you're risking too much. Because the only reason that would be is you enter the trade with the thought that you can't lose. If you feel like, oh, I gotta move my stop loss farther away, right? If you start to feel that when you're in the trade, that means you weren't prepared to lose. If you were prepared to lose, then why would you move it? It's just another trade. You shouldn't feel anything from it. It's just another trade. But when you enter that trade with too much risk, the only thing on your mind is, man, I hope this goes to take profit. Obviously we want it to, but that shouldn't be on your mind. The only thing on your mind should be, I hope that nothing out of my control happens, right? If we're worried about anything, internet doesn't go out, things like that are out of our control, but never should we be worried that it's, might not go to our take profit or it's going to hit our stop loss. So that's one level of real improvement. But then the next level would be, let's say we do go 6 months of trading and we follow our rules 99% of the way. We're not going to be 100%, but you follow it 99% of the way. And you get to the end of those 6 months and you say, man, I really didn't get the returns that I was expecting, right? And so, again, there's a huge difference between making a profit and then being like, oh, I want to make more, making a change, and not making a profit, right? You follow your rules and everything, and you go 6 months and you don't make a profit. Most likely you're break even. It would be difficult to go that long and end with a serious loss, right? Unless you don't take many trades, but most likely you're break even. That would be a time where I would say it's okay to take a step back, look at your strategy, and see what minor changes can we make. But before we implement them, we back test it extensively, and we make sure that everything that's being shown and everything that's being done is not going to lead us to subjective or emotional decisions, right? Okay? And now I'm going to move on to the next one. These are those steps to improve, right? This is kind of what I just went over, but more condensed in a one-by-one step setting. And the first one is accepting losses happen, right? We already discussed that, but I put that there anyways to let you guys know it is okay to lose. And I'm going to be totally upfront with you guys. The last, I want to say probably 3 weeks now, as of this week, I've been back. Right, market's been back for me, I should say. I've been here, but probably the last 2 weeks then, prior to this week, market's not been there for me. And I had a few mistakes that some of them were out of my hands, out of my control, and it cost me some money. That it did suck, but we take it in stride. But most of it was in my control, meaning I was placing the trades that I follow my rules. But guess what? I lost anyways. Right? Never think that following your rules doesn't mean you're not accountable for your losses. Even if you follow your rules to a T 100%, you are still accountable for those losses. I'm not saying it's a bad thing, but you can't say, well, I lost, but I follow my rules, so it doesn't matter. No, it still matters. You still lost, right? This doesn't mean we make a change, but it means we accept, okay, I took a loss, what do I do next? Well, you take the next trade the same way you took that one. But if you take some more losses, hey, maybe we pull back on how much we're risking, right? Maybe we take a step back and we say, okay, maybe I'm taking too many trades per day, right? We backtest those things so that we're not changing our strategy, but we're saying, okay, I need to mitigate risk a little bit. Just to put that out there, that accepting losses is different from ignoring losses, right? Next is being patient. This is so crucial, guys, and I go over it almost every single week because I need to hammer it into your heads that trading is not a week-by-week game. It's not a month-by-month game. It is a several months by several months to year game, right? We are not looking at short frame data because short frame data does not mean anything. Think about lower time frame, higher time frame, right? This is the best way I can put it in your guys' heads is if you look at the lower time frame, right? We can all agree the 5-minute time frame is going to be less accurate than the 4-hour time frame when it comes to predicting where the market's going to go. Why is that? Because there's less data on the 5-minute time frame. There's just less. Even though it's comprised of the same movements, it is condensed in the 4-hour and we can see it on a large time frame, on a large scale map. Whereas the 5-minute, we only get a snapshot of that. Now take that and apply it to your trading, right? Imagine that in your trading, you are only ever looking at the 5-minute, right? Figuratively, right? Meaning that you're only looking at a couple weeks of data. A lot of you guys might do that. And if we're only looking at a couple weeks, how can we accurately dictate where our profit is going to go? How can we accurately depend on a few weeks of data to dictate where our next year of profits is going to go? It doesn't make sense. Why would today's downtrend make me feel that the market's going to go down for the rest of the year? That doesn't make sense. So why would I go and change something that is so short time? right? So take a step back and back test. Maybe back test 6 months, maybe back test 9 months, maybe back test 12 months. Whatever you need to do to say, hey, I have a year's worth of data now, and I feel confident that this year's worth of data that ended green, right? I'm not saying backtest for a year and have it end red or break even and then go into the next year hoping that it's green. That doesn't make sense either. You have a year's worth of data and you say, okay, well, this ended green. I'm confident that if I trade this strategy for the next year, I'm going to get something similar. But that's where it becomes important for you to understand the market, and we get to improve little by little, right? Because that's when you get to be more accurate with knowing what the future is going to look like compared to the past. Okay, so the last one, concrete changes. This is exactly what I was talking about just a minute ago when it comes to making mechanical changes, right? Don't go into this thinking, all right, here's my strategy, right? Let's make one up real quick just for ease of use. You take every time it hits support, you long. Every time it hits resistance, you short, right? Perfect, nice and easy. Everybody can imagine this. Well, if I do that for 6 months, you're probably going to get pretty close to break even, right? You might get lucky and you might have some wins. You might get unlucky. You might, lose. Whatever, let's just assume you're pretty close to break even. Well, you get to that 6-month marker and you say, man, I traded my strategy 100%, 99%. It's been 6 months and I don't have anything to show for it, or at least very little. You say, I think I'm going to make a change. And you go into it after having an indicator place all those levels for you, and you just buy or sell. And you think, you know what? I think I'm going to start to determine what trend the market's going in by myself. And I'm only going to long when I think it's an uptrend, and I'm only going to short when I think it's a downtrend. In theory, this should work. In theory, it should work, and I promise if you backtest that, it will work. The problem is when you go to live, the first thing you're going to think, you're going to mark out your lines, dictate where the trend's going. Oh, it's an uptrend. Great. I'm only taking longs. Well, you're going to see a short setup that looks pretty good. And you're going to start to think, man, maybe it's a downtrend. Let me zoom out a little. Hang on, let me zoom out. Ah, shit. It is a downtrend. And you short. What happens? You get stopped out. Now you have to sit there and think, man, why didn't I stick to my rules? I knew this was a long uptrend. You see the problem? The problem is you're going into this from being a mechanical trader, someone who didn't have to think this way, right? I'm not saying you were dumb or you weren't experienced, but you just weren't ready for this type of thinking. And you're trying to make a change that you're not used to. That's erratic change. That's thinking, oh, I'm going to skip ahead. Oh, I'm going to get straight to making more money because I know where the market's been going because I've been doing this for 6 months and I didn't lose, but I didn't really make some, so I'm going to make this change and I'm going to get better. That's erratic change. Steady improvement would be take that same concept, but instead of saying, hey, I'm going to dictate where the trend's going, maybe make it easier. Find an indicator that shows you, hey, based on these rules, and I use one on my chart, and the rules inside the indicator are, is it making new lows, like lower lows, or is it making higher highs? Which one is it doing? And if it breaks the previous high's low, right, the higher low, if it breaks that, then it now changes to a short trend. If it breaks the previous high low, or the previous high's low, and it breaks that, now it is going in an uptrend, right? And it uses that formula to tell me, hey, this is a change of character, we're now going long. Hey, it's a change of character, we're now going short. And it gives me break of structures. It's the same idea, except it's the indicator putting it on the chart for me, and I just follow along.